welcome to the Shipper Update. I'm Anthony Smith, Chief Economist here at FreightWaves, and it's Monday, so that means we're looking at the upcoming releases for the week and what to keep your eye on. So this is a pretty big week for data releases, and so we're going to jump into the first one behind me. I have CPI, or the Consumer Price Index, in the blue line, and in the orange line, we have a regression line, so we can see what the trend has been and where it's moving above or below it. This regression line is going to be set back to 2018, and as we can see, there has been some pretty significant upward movement above that orange line, showing that it is essentially above that regression line that we have trending out since 2018. When we're looking at the CPI, or the Consumer Price Index, that's going to be a measure of inflation, not the key gauge that the Fed looks at, but definitely a key gauge to keep your eye on. And we're looking at the year-over-year movement. The last report out showed that there was a 7.9% increase on a year-over-year basis. This is expected to go up in the upcoming release. One of the things that we did see in that last release was throughout February that there was some upward movement. In March, we had even more upward movement that we're going to talk about a little bit later on in gas prices. And of course, that's going to come from some of the fallout from Ukraine and Russia conflict. So looking at the CPI, this is going to be a lot that's going to be tied to how much those consumers are going to be able to spend when the CPI keeps going up, up, and up. We spoke about it a little bit earlier with that carrier update with Thomas Watson, that there's going to be a lot more thinking going into some of that spending, a lot more discretionary aspects going to be put into factor. So we're going to see consumers really have to think about, hey, am I going to buy these essential goods? Am I going to spend on goods and services? Where am I going to really allocate my funds? And so this all really comes into a head because we also saw last week that consumer credit card utilization also had a pretty significant increase, especially on that revolving credit card usage. So looking at that revolving credit card usage, I should say, a lot of it comes to credit card usage. We're seeing a lot more utility with that as well. So we're seeing consumers use their credit card a lot more, which is going to take away from their ability to spend on a lot of other goods. So we're looking into our next chart here. We're also going to look upstream at the Producer Price Index. No need for a regression line here. We can see that upward movement here. We can see that spike going on, and those producer prices are ever increasing, showing that we're going to be watching, this is going to be another one that we're going to be watching closely in the upcoming week. We're seeing that, or we're expecting that this is going to continue to move upwards and stay at that elevated rate. Last report out, I think it was a 0.8% on the final demand, probably going to stay elevated on a month-to-month basis. When looking at these 0.8 or 1% increases, it might not seem like a lot, but when this is happening on a month-over-month basis, it really starts to add up very quickly. And that elevated producer price index really shows, or really puts that expectation that there's going to be more inflationary pressures going downstream as those increased costs are passed from those producers down to those consumers. Going to our next chart here, it's definitely going to be an interesting one for retail sales. It's going to be one that we're going to be watching closely. Last month's retail sales report showed that there was a 0.3% increase. So on the surface, this seems like good news. There's growth in retail sales, and this was throughout February. But when you start looking into some of the details, it's not as really positive as it may all seem. When you start looking at where some of that positivity was in those subcomponents, it really kind of starts putting it all together. I have retail sales here for non-store retailers, which had a 3.6% downward movement, so roughly 3.7% downward movement on a month-to-month basis. And we have in a green line here our Van Outbound Volume Index. Not saying that there's a one-to-one comparison here, but when retail sales for e-commerce and non-store retail sales are higher, typically we see a little bit more freight volumes. We've seen freight volumes come down all throughout March. And so really that's going to tell us that, tell me at least, that there's an expectation that there's going to be some downward movement in other aspects for retail sales, especially those that are going to be around those goods side. The other big part that really propped up retail sales in our last report out was that gas stations retail sales increased, and this was through February before the spike that we saw in March. So expect that to also be a factor into this upcoming month's release as well. Going into our next chart here, not just retail sales, but we also have industrial production, which is going to be following shortly after that. up 0.5% in the most recent release, showing that there is still some ongoing movement for industrial production. My expectation here is that we're going to see a slower rate of growth, but still growth nonetheless for industrial production. This is going to be another one that's going to keep flatbed trailers pretty busy, I think, as well as when we look at the construction activity as well. So we're looking at upstream movements within manufacturing, we're looking at construction activity. These are going to be both areas that those flatbed trailers can really start to utilize in the coming months here. Another one to watch out for in the industrial segment, this one's a little bit more volatile typically, but defense spending is likely going to be an area that will likely start to push a little bit more industrial production activity, excuse me, on a different side of the industry, on a different side of the segment. So this one's going to be another one that's going to be watched closely. And next chart here, we have one more, and that's going to be weekly initial jobs claims. This one has been hitting historic lows. This one has been undergoing some different adjustments and seasonal variances. So we'll dive into some of those trends as we move closer to Thursday and talk about what's going on there. But that's going to do it for this shipper update. Right now, we're going to toss it back over to Thomas Watson, who has a guest here with us.